Okay guys, so to get started, we're going to start by building the shells of the financial statement. So the income statement, balance sheet, and cash flow. And this is a fundamentally important step because it basically provides the foundation for everything and also teaches you the way in which the integrated financial statement concept comes together. Okay, now, the most important thing to bear in mind when building an integrated three-way financial statement model is that the primary links between the financial statements are net profit after tax. If you look at my screen, I've got a diagram here. The net profit after tax, which goes from the income statement through to the equity section by, I suppose, into retained profits on the balance sheet and becomes part of equity. And then you have change in cash held coming through from the cash flow statement into cash on your balance sheet. Now, those two links are the key financial statement links. Everything else that comes into your financial statements comes in from other places, like revenue comes in, expenses come in, debt comes in, equity comes in. But those two primary links are the key links between the financials. And this diagram here we've got is called a financial statement impacts diagram. Now, if you just open, we've got an actual tool called the Modano Financial Statement Impacts Analyzer, and it's kind of the financial modeling equivalent of a debits and credits type analysis. One of the problems a lot of people have when they build financial models for the first time, coming from say an accounting background, is they think about debits and credits, and they think about this, debit this and credit cash and all this sort of stuff. With financial modeling, you really need to think about the impacts on the financial statement. So if you look, for example, just at the revenue impacts in that 1A in the financial statement impacts analyzer, it shows you that if you take everything else out of a set of financial statements, revenue basically increases earnings, and that's ignoring tax, ignoring everything, increases earnings, increases cash. Now, obviously, in a real life scenario, you might not receive that. You might have shot an invoice out. So in that scenario, you'd have to adjust for working capital, for debtors, for example. But in a financial model, you look at each piece separately, and that's the modular way of thinking. That's how you build a three-way. So we're going to be using these financial statement diagrams throughout the exercise to drill into you how to think about how things impact the financials. Because if you can get your head around how this stuff works, you can model anything. And you'll see in this exercise, we have the financial statement diagrams, impacts diagrams for each type of impact we go through in this course, which are 17 different types of the most common 17. And then at the back, we have a bit of a scratch pad right at the back. I think we show all the impacts down in section 7, and then we have the scratch pad at the back where you can go in and have a play and just type in some impacts and show how stuff flows. But if you can understand how, in your head, things impact the financial statements, the most common items enter, you can build a financial model pretty quickly and pretty easily. And that's what we're going to be going through in this exercise. Okay, so in a forecast financial model, you basically, in an historical and forecast financial model, you might have historical financial statements, like historical income statement and balance sheet. That's something we actually cover in a lot more advanced training on our website, because it is quite hard to map a lot of historical data. With a forecast-only model, you start with what's called an opening balance sheet. It's called an opening balance sheet because it's basically the opening of the model, the start of the model. It's the model start date. The model start date balances. So in this case for Apple, for example, we're taking their financial report from ending 2020 is where we've got. So it's basically the end of September 2020 data is their opening balance sheet, which is the start of their FY 21 year. Or is that, no, 22 year? 22. Okay, so sorry. We're actually doing the 21 year. So we've got the opening, but we've got the balance sheet for Apple starting in, because when we're recording this, it's actually October, so they haven't released their 21 data, right, even though their financial year's just finished. Yep. So by the time you're watching this, there may be a new financial report available, the FY21 report. By the way, FY stands for financial year, obviously, but at this point in time, we're going to be focusing on the last year being the 2020 financial year. Okay, so the first forecast year in our model is going to be FY21. Cool. Now, if you look at the opening balance sheet here, this is how it fits into a forecast model. The opening balance sheet basically contains balances that feed into things like debtors, inventory, creditors, fixed assets, and then it feeds in your opening cash and retained profits into the forecast balance sheet. But then in a properly built financial model, all your forecasts are built sort of, they take in data from the opening balance sheet if necessary. Revenue doesn't, for example, but working capital does, and then it forecasts it into the three-way financials, and the financial statements then balance as a result of the balancing impacts of those. So the opening balance sheet really is the starting point for the assets, liabilities, and equity of the business. And so let's open up. So let's open up the model. So before we do that, actually, let's just have a look at the Apple annual report. So the Apple annual report on page, I think it's 33. On page 33, we've got their financial statements. Now, what I found amazing looking at this was that Apple is an enormous company. So 31 is the consolidated statement of operations. So, their balance sheet is on 33. So what I found amazing is that Apple's an enormous company and their Form 10K just is so simple. You can dip down a little bit and see some divisional analysis, but it's amazing how little there is. Like other current assets, 11 billion. Other non-current assets, 42 billion. So putting that aside, it's quite hard to get your head around. It's quite interesting stuff. So let's look at the opening balance sheet for Apple, which is their FY20 closing balance sheet. Now you'll see the FY20 closing balance sheet contains total assets of 323,888, total liabilities of 258,549, which results in net assets and shareholders' equity of 65,339. Okay, and that's really what you need to think about. Assets minus liabilities equals net assets, which equals your equity. And that's how your balance sheet balances. And obviously, with financial modelling, the number of times you hear people say, oh, my balance sheet's not balanced. And it's because they've lost control of the linkages into the financials. And that's why this is so important to understand how all of this works. Okay, so let's get started. So let's open the workbook. If you're doing this online, click the download starting model. Otherwise, just open the Apple financial model, the empty XLSB file. And just activate the time series assumptions. Now, actually, before you get started on this, Yun, for those who haven't actually seen a best practice financial model, and this isn't specific best practice, it doesn't matter whether what approach you're adopting, this has just general best practices in it. It contains a table of contents with hyperlinks. It contains error checks at the end. If you just go to the appendices, say 3B, it contains an error check for each of the financial statements. It contains some alert checks for things like, is there negative cash on the balance sheet, which may not be an error if you've got an overdraft, but it's something you want to be warned of. And it contains the hyperlink infrastructure. So if you cell A1 there contains that target little picture image. If you click on that, we'll take you back to the TOC. So throughout this exercise, to go to a different sheet, just go, we're going to be talking about using the table of contents rather than saying go to this tab, because we want people to get used to using hyperlinks, because that's how you should be building financial models. Okay, so you'll see this financial model contains an overview sheet with links to the rest of the model. Let's click on the 1A time series and just make sure we've got the financial year end as September. We've got five years in this model. First financial year is 2021, first forecast year, and we're putting it in millions, which is funny because obviously that's what the annual report is in, but it looks like it should be. You could almost build this model in billions if you wanted to. So let's go to 1B in the table of contents and go to the opening balance sheet. Now, you see the opening balance sheet. In this financial model, if you've never built a financial model before, we've just used some cool Apple-ish type colors to distinguish assumptions from non-assumptions. An assumption basically is anything in the model that the model user is able to change when using the model. So for example, the heading cash is not an assumption. It's not formatted as an assumption. The user shouldn't be changing that heading. But those shaded cells in column J are basically where the user can enter assumptions. And that's been consistently done throughout this model. It doesn't matter what color they are. You can change them to yellow if you like that, pink, purple, whatever. The key is just consistently distinguishing assumptions from non-assumptions. So you'll see at the moment the opening balance sheet is just empty. It's got no data in there. If you go down to the retained profits section of the calculation at the bottom in cell J34, you'll see it's got a calculation in there that basically makes sure retained profits will make it balance. Okay, so what we're going to do in this exercise is we're going to add to the opening balance sheet as we build the model. Because if you put all the data in now and reconcile with their closing balance sheet for FY20, it'll take ages before the balance sheet will balance again, because you'll have to, until you've finished everything, it will not balance. So what we're going to do is we're going to actually put in pieces as we add them to make sure each step balances as we go. And that's an important thing to do. It's quite hard to build a full financial model without it balancing and then work out if it doesn't why. But if you do it one step at a time, you never lose control. And that's absolutely key with a financial model. It's also something why we talked about earlier, why often you'd want to build the parts completely separately in the model and put an error check on, say, the fixed assets calculation prior to the financials, rather than just having one error check on the balance sheet, which is what we're doing in this exercise. And that's what, in investment banking, we all did. We had like 1 or 2 error checks. And the balance sheet wouldn't balance, and we'd be like, there goes my sleep tonight. So what we're going to do in this case, we're going to just build it up. So don't enter any other data yet. All we're going to do at this point in time is start with Apple's opening balance sheet cash. Now, to get its opening balance sheet cash, you just go to its last closing balance sheet, which is for Apple, which is the 26th of September 2020. And you'll see on their balance sheet on page 33, their cash and cash equivalents is 38,016. So 38 billion and 16 million. So let's put in 38,016. You'll see that the balance sheet automatically balances because the retained profits plug or balancing item calculation ensures that's the case. That's something commonly done on a balance sheet. That's how we always do it. If you do, you just need to make sure you don't end up throwing so much in there that it makes no sense. But And for a simple model, it will work pretty reliably. Now, so we put that cash number in. When you talk about cash and cash equivalents, it's pretty straightforward. Apple's a bit interesting how they do their cash. We're going to talk about that. They've got so much cash, so we're going to talk about that throughout this exercise. But cash and cash equivalents are just obviously cash at bank and marketable securities like term deposits, things which, for example, you can the cash equivalents are things which you can immediately change into cash and buy stuff with. Mm-hmm. Okay, so in the actual documentation we have, when you're reading this, you'll see that we use a lot of precedent-dependent link arrows to show how stuff works. Ewan's just going to step through stuff and we'll talk through it during these videos to keep it nice and simple. So you'll see big picture on the balance sheet. Your balance sheet is comprised of your current assets, non-current assets equal your total assets. You have your current liabilities, non-current liabilities equal your total liabilities. Your net assets equals your total assets minus your total liabilities. And then your equity is your ordinary equity plus your retained profits. And the retained balancing item, the retained profits, ensures that your net assets equal your total equity, so it balances. Okay, so now it's time to start actually building the financial statements. So if you go to the table of contents and go to the income statement. Now, an income statement, we've always called it an income statement. You can call it a profit and loss. You can call it a statement of financial performance. I think in the Form 10K they call it a consolidated statement. They call it a consolidated statement of operations. It's basically calculates your profit. It's your profitability. Okay, so if we look at page 31 of the annual report, it's quite impressive stuff. So Apple's total revenues, you've gone from 265 billion to 260 billion to 274 billion. Interestingly, I did look at this. It's interesting that their iPhone sales are dropping off slightly over the last year, which is it's an interesting change in the business taking place at the moment. So we've put some forecasts in this at the moment, but it would be really interesting to see how these go going forward. But you'll see looking at their reported sales, 274 for FY20, net income of 57,411. Now, one of the things in financial modelling is we try and standardise the way the P&L is laid out based on how you forecast each item. So our P&L is going to look a bit different to this. So if you look at how our P&L is actually going to look, our P&L is going to actually have revenue minus COGS leading into gross margin. Then we subtract operating expenditure. We are ignoring things like I think other operating expenditures and revenues here. We're just keeping it simple, but you could easily add those, and we talk about that because they're actually not that significant for Apple. But we have gross margin, and we subtract OPEX to get down to earnings before interest, tax, and depreciation. We subtract D&A, depreciation and amortization, which gets you down to earnings before interest and tax, which is your EBIT. We subtract net interest expense, which is your interest expense, net of your interest expense and revenue, and that gets you down to net profit before tax. And then less your tax expense gets you down to net profit after tax, which people refer to as NPAT. Okay, so these are the key line items within a fairly standard financial model income statement are gross margin, EBITDA, EBIT, net profit before tax, and NPAT. Okay, and it's important to think about the fact that your Form 10K data is not that clear because the data is reported just simplistically based on revenues, expenses, profit, because people are looking at public company, they're looking at the earnings. For modelling purposes, you have to break out things like D&A and operating expenditure because you forecast each item very specifically using different drivers. So getting the data from the financial model, from the actual Form 10K, the annual report, into the financial model is half the challenge. And half the challenge building this course was working out how you basically build up the forecast based on the different data. Okay, so what we're going to do in this is we're going to actually build the shells of each of the financial statements with basically nothing in between them. So the line items, and then we're going to populate them throughout the rest of this course. Okay, so for the income statement, let's get started. Now, if you go to the income statement sheet, which is IS, which is Ewan's on at the moment, we're going to add all of these line items. You'll see all it contains on at the moment is an error check. The rest is just an empty parchment. So we're building it from scratch. Okay, so Ewan, let's start. So in row 14, let's put gross margin. Put gross margin, and we're going to make that heading bold. Now, we're not going to use styles properly on this. In a real model, you might have a style set. We recommend using styles and stuff all the time. We're just going to be using bold and borders and shading and stuff. So we're just going to keep stuff really simple on this. So gross margin, just put the data in as 0 and just put a top border on that and make it bold. And obviously, Ewan is copying across here. So there are lots of ways you can do this. I mean, I often build down one column and then copy across, but okay, let's do one at a time like you're doing because that's how most people would probably do it. So, so you see, we just put gross margin as 0. We're putting the total in. That's great. So let's now go into EBITDA. So in row 16, EBITDA, earnings before interest, tax, depreciation, and amortization, and just make that heading bold as well, and then go across and make that. At the moment, we're just going to make EBITDA equal gross margin because we don't have any other information. So as we actually build this model, we're going to actually incorporate all the data as we add it, rather than putting zeros everywhere. So let's make that equal that. Let's make that bold. Add another top border.
And I'm obviously running with I'm running with a whole bunch of hotkeys, but I'll show here bold and top border up here in the home page.
Exactly. So if you like using the mouse, obviously all this is via the home tab, just formatting. If you like using the keyboard, it's just Control B, and then copy and paste right, Control C, Control select, and Control V. Okay, so let's add EBIT in row 18. EBIT, earnings before interest and tax. Make that bold as well, and just make that equal J16. Add top border. Make it bold. Cool. Okay, great. Now let's go to net profit before tax in row 22. There's a slightly bigger gap there because we're going to put in some interest expense and interest revenue and interest, net interest, etc. So there's 3 rows in between those guys.
Yep.
And net profit before tax, make that bold and just make that equal J18. And again, put a top border on it and make it bold. And then finally, the key output of this is the net profit after tax. And that is in row 24, and I'll just make that bold, and let's put that in as equals J22, and then copy that across.
Cool.
Now, a couple of things to note here. Firstly, when you're building a financial model, you should be able to copy across the first column always. Always. People that have a different formula in the first column than other columns, that's just a disaster waiting to happen. So if you select your entire, if you select from row 14 to 24, column J, and copy that across, that should be absolutely fine, right? Now that border on the bottom, now net profit after tax, one of the things you need to know in Excel is that there's a difference between putting a border on top of a cell and putting a border on the bottom of the cell below. If you put a border on the cell above, then when you group the row above, it will hide. In this case, we're not going to actually group and hide anything that's visible there, so it's fine. We use different level borders in different parts of the financial statements to show different levels of hierarchy. So here, the bottom, the ultimate output is net profit after tax. So we've got a single top and double bottom border. That's really common. We're going to do the same in the other financial statements to show the key line items. But that basically is the financial. That is basically the income statement shell built. Now let's just add the error check to the bottom of this. The error check on the income statement doesn't check whether it balances or anything. It's just checking to see if it's an error. Okay, and to use that, we're going to use. There are lots of ways you could write this formula, but try and stick with us if you can, because if you're uploading your answer, it'll mark a lot more smoothly if you stick with what we're doing here. So we're just going to use an if statement, and it's an if statement and an is error function. So let's write this formula. So equals if, open brackets, and we're going to say if an error happens in the net profit after tax row. So if is error, open brackets, J24, which is the net profit after tax number for the first year, then comma, so close bracket, comma, 1, otherwise 0.
Close bracket.
Close bracket. All right, and then copy that across. Now that formula is simply saying if there's an error in that cell, and the beautiful thing about the is error function is it captures the error without being an error itself. So if you're now going to cell J24 and you just type in equals 1 divided by 0, that'll throw an error, and now the is error will pick that up. It will return a 1, and that error check basically is just checking in cell I20, I think it's that I26, is just checking to see if any of those cells have anything other than 0 in them. If they do, it throws an error, which if you go to error checks at the back of the model, we'll then come in and say, hey, there's an error in the income statement, and we've fed that error through to the overview sheet, model name cell. So if you go to the overview sheet, we've just put a link in there saying, hey, tell us if there's an error. So what that means is if there's an error in this model, whether the balance sheet doesn't balance or there's an error in the financials because somebody's div 0, you'll get this nice clean indication, hey, there's an error in the income statement in the actual front overview sheet, and that then feeds throughout the entire model. So you'll see every sheet has that in the title. So that's our error check. So let's just remove that error you just threw in there. Just put that back to what it was. And that's the income statement done. Okay, so that's the income statement. Let's now do the same. Now we're going to move across to the cash flow statement now, because the balance sheet effectively brings in profit and brings in cash. So we've now done our basic profit shell. So now we need to do our cash shell on the cash flow statement. So let's go to first of all, let's look at Apple's cash flow statement. So as for Apple's, now the cash flow statement is again, it's referred to as a statement of cash flows, or it's referred to as, in this case, I think Apple referred to statements of cash flows. Now they say statements of cash flows because they've got 3 years. Apple's reported operating cash flow of $80,674 million in FY20, which I've got on my screen now, and investing cash flows of minus 4.289 billion. Financing cash flows of 86 billion, resulting in what's called a net decrease in cash held of 10.435 million, so 10.435 billion down here. Now, interestingly, this change in cash, basically, we'll go through this in a minute. The change in cash doesn't exactly equal the change in cash on their balance sheet. So you'll see the change in their cash on their balance sheet from 48,844 to 38,016 was actually different. So the actual change on the cash flow statement of 10,435 is 1.773 billion higher. That's because they have restricted cash, right? So the restricted cash basically, which noted, it's included in other current assets and not included. So they've got some other current assets cash reported in their current assets part of their balance sheet. They've got some of their cash recorded as restricted cash, but they haven't put it in cash and cash equivalents because it's restricted and they can't touch it. Mm-hmm. So they don't want to list it as cash or cash equivalent because it's not, because it's restricted what they can do with it. So that's why the change in cash on their cash flow statement is not exactly equal to the change in cash and equivalents. But if you actually add in that 1773 as per the notes on page 41 of their financial statements, you do get an exact reconciliation of the movement in cash on their cash flow statement with the movement in cash on their balance sheet, which is really important to bear in mind because that's what makes your model balance. Mm-hmm. Okay, which we'll discuss. We'll discuss when we pull this all together. Okay, so now something else to note is the cash flow statement in the Form 10Ks almost always uses what's called an indirect method approach. Now, there are two main ways you can lay out your cash flow statement. The direct method is you just list like a bank statement, effectively your operating, investing, and financing cash flows, and you just have cash. That's how we do it in financial modelling, which I'll discuss in a moment. The indirect method is what accountants do and what annual reports do, which is where you start with your profit, add back a whole lot of non-cash items, and reconcile to your cash change. The benefit of the indirect method is it doesn't enable you to reconcile your P&L with your balance sheet. For financial modelling purposes, it's a bit of a disaster to do it that as the core approach, because you basically want to you want to forecast the cash movement of each item straight into the cash flow and have your cash flow show your cash changes rather than a whole lot of adjustments for non-cash items. So what we normally do, if you want to include an indirect cash flow statement in your model, build the core cash flow statement using the direct method and then add an indirect method as a presentation output. Or below the direct, so you've got both. But always make sure your financial model forecasts a direct cash flow statement. That's something most accountants always want to start with indirect. For financial modeling purposes, you'll never regret using direct as your primary method. So if you look at on my screen, you look at the direct cash flow statement. Unlike Apple's, which starts with their adjustments to netting to reconcile to cash, you literally just have cash receipts, cash payments, interest on cash, interest paid, tax paid. It's just cash. It's like a bank statement, and the reason as we build up this exercise today, you'll see how we do all of this. That's what our cash flow statement's going to look like. Now, a cash flow statement, most of you will probably be aware, is broken into three main sections: the operating cash flows, investing cash flows, and financing cash flows. Within the operating cash flows, we look at three sub areas, which is the cash receipts section, the cash payments section, which are really the actual operating cash receipts and payments of the business. And then the remainder fall into sort of other operating cash flows, which is stuff like, tax, interest, interest paid, interest on cash, other items such as random movements in things, which is often just throwaways. They shouldn't be overly significant. Most things should be receipts and cash receipts and cash payments. So let's build the shell of the cash flow statement. So that means we're going to build the cash payments, the cash payments and cash receipts and cash payments headings, and then we're going to build the net cash flow from operating activities, like total, and the same with the investing and financing cash flows, and ultimately the net increase or decrease in cash held, which is the ultimate output of the cash flow statement. Okay, so let's go to the cash flow statement. We're going to start by putting cash receipts in row 14. So go to row 14, and all the headings are in column B. So in column B14, put cash receipts. And we're not going to bold that. We're just going to put 0 in as the data to start with because we don't have any data in there yet, and just copy that across. Now we're going to this one's interesting. We want to put a top border on that. But what we're going to do when we finish this exercise is we are going to compact the rows. We're going to group and collapse the rows above that. So the cash receipts detail we're going to hide from view, but just to make the cash flow statement more user friendly. So we want to put this border on the row above so that when we collapse those rows, it disappears. Mm-hmm. So let's select the cell above. Which is row 13. And then we want to let's put a dash border just to show that it's sort of a sub-level. So go to your borders. I just do format. I just do format cells. So we'll do more borders maybe at the bottom.
Yeah, it's usually line style.
Yeah, or I just do more, just to keep it simple, just do more borders. And then on that one, let's choose the dash border, which is not that one. Keep going down. Second from the bottom left, I think, is that one there. Mm-hmm. That's my favourite, I think. Let me have a look. Have you got the right one there?
Yep,
that one. So choose that dash one, put that dash one on the bottom, and click OK. Did you already have a border there?
Sorry?
Did you have a border there already?
Yes.
You need to get rid of that border.
Okay.
Yeah, so get rid of that border. So cancel that, clear your border, because that bottom border will actually display when we collapse the row. So make sure you've got no border there at all.
Mm-hmm.
All right, now go in and do, more borders, and just do dash border on the bottom.
So dash, and then I'll click on the bottom line.
Exactly. Put that in. Okay, and then copy those two cells across. So rows 13 and 14. Just copy that across. Cool. And that's our cash receipts. Okay, so let's do exactly the same with cash payments in row 19. So cash payments. If you want to save time, you could probably just copy the one above.
Mm-hmm.
So just copy those two rows and paste them down.
And I'll paste them in 18 so we get that in
paste
the row
18,
above.
19, and then copy that across. So we're just putting zeros in and we've got the borders above the rows.
Mm-hmm.
Okay, so that's our cash receipts, cash payments. Let's put our net cash flow from operating activities in row 26. Net cash flow from operating activities. That is obviously the net cash flow from the core operations of the business. And let's just, in that case, make that heading bold. Yep, and then just do equals. At this point in time, it's just going to equal cash receipts plus cash payments until we add a whole lot more in there. So cash receipts plus cash payments. And let's make that bold and put a top border on it and copy it across.
Cool.
Okay, so we've got cash receipts plus cash payments equals our net cash flow from operating activities. Okay, let's put our net cash flow from investing activities in row 30.
And I'll probably just copy the one above.
Yeah, you can copy that.
Save some time.
Exactly. So net cash flow from investing activities. This is things like investments in capital expenditure, etc. Okay, and let's just put just a zero there, make it bold, and put a top border on top of it, and then copy it across. So again, it's just a placeholder. These are all placeholders for now. And net cash flow from financing activities, copy and paste that row. You can just copy and paste that entire row from financing activities and copy that and paste that into row 38. Whoop, the whole row, yep, put that in and then just change it from investing to financing. Okay, great. So we've now got our net operating cash flows, our investing and financing cash flows. So we just need our total, basically the net increase, decrease in cash held. So in row 40, let's put net increase. Let increase / and then in brackets decrease to indicate that a negative number is going to be in brackets in cash held. Great, and then bold that. Okay, and then obviously the net increase decrease in cash held is actually the net of the operating, investing, and financing cash flow. So equals J26 plus J30 plus J38. And like on the income statement, we're going to put a top and double bottom. We're going to make that bold, and we're going to put a top and double bottom border on that. It is hard to see what you've bolded and what you haven't when you do this. So, if you're doing the exercise and you're getting this assessed at the end, that you might get caught up on that, but you'll find it sooner or later when the numbers come in.
Easiest way to tell is also if it's currently in the home tab as the bold selected. Nice little cheat.
Nice. Okay, so that basically is the shell of our cash flow statement. Now let's just go down to, you'll see we've got group rows in rows 42 to 43. They're the error checks for the cash flow statement. So let's just go and put as the error check formula. We're going to do a very similar formula to what we used on the income statement. We're just going to do if is error. So equals if is error, open brackets. So if open brackets is error, open brackets J40. So just select the net change in cash held. Net increase change in cash held. So if that, then 1, otherwise 0, close brackets. So exactly the same formula. And that's the key error check we put everywhere, because you've got to check for an error value before you can check. You can't just start checking to see if something reconciles. So what we do is we put one row that just says check to see if there's an error value in there, like a div 0 or a ref, because someone's deleted a row or done some calculation that doesn't allow for dividing by 0. And the second one is the reconciliation. So this is a more complex formula. Now I'll show you how I write a more complex formula like this. This formula is going to say if there's an error, don't do anything, because the prior error check will have picked it up. Otherwise, we're going to do a check to see that operating plus investing plus financing equals the total, right? Which is important, because when you're actually adding stuff to the financial statements, this will pick up whether you've forgotten to add something, because it won't appear that the total cash held might not actually equal properly if you've done an incorrect sum. Okay, so this formula is going to be, we're going to use what we call the staggered development principle, which is where you build a formula up pieces at a time. So let's start with the first if. So we're going to do equals if open brackets and select J42, which is the prior value. So if the prior value, so if there's an error value, if that is greater than or equal to 0, so not equal to 0, so it's not equal to. Yeah, not equal to 0, then put 0, because that's already going to have detected the error. Otherwise, put 1 and then close brackets and press enter. So that's obviously thrown an error now. But what I've done there is I put the 1 in where we're going to put the actual check now. Okay, so this next check is going to check that basically the sum of the parts is equal to the total. So we're just going to put in here where the 1 is. Now select the 1 and just do an open brackets. And we're going to use a round function. Now the reason why we're going to use a round function is because Excel rounds to 35 decimal places. In a financial model, you often have that causing issues where the balance sheet will be balanced, but it will be rounded. So particularly if you've got growth rates or whatever else, or tax rates, where if you don't round, it'll be off by like 0.00001, and the balance sheet will say it's not balancing. So we normally round to 5 decimal places, which when you're doing millions is a few thousand. It's okay. With Apple, it's an enormous business, but it's still probably not that material. I mean, most people sort of consider materiality to be the rounding you have on your screen. So in this case, it'll easily capture that. So let's do open brackets and then do round, open brackets, and then do J. So we're going to do J26 plus J30 plus J38. So that's the operating cash flows plus the investing cash flows plus the financing, and then minus J40, which is the net increase or decrease in cash. So minus J40, and then comma. We're going to round that to 5 decimal places, and then close brackets, and then we're going to do that. Then we're going to do if that. So if the round of that is not equal to, so it's not equal to 0. So do not equal to 0, and then close that bracket. So what we've done there is that's going to return true or false, and now we're going to multiply that by 1. So multiply that by 1, and what we're doing there is if it's true, that'll be 1. If it's false, it'll be 0. So instead of using another if statement, another embedded if, we've just taken the round of the difference and said if the round of the number is not equal to 0, then that'll return a 1, and that'll return. So press enter on that, and there's your formula. So if you go in now to your net increase, just type in, say your net increasing, just type 1 there. That'll pick that up. Okay, so just undo that. Make sure you copy across that error check formula. Okay, and that's our cash flow built. So we've now got the cash flow statement with the core 3 sections, with the cash receipts and cash payment subsections in the operating cash flows, and then we have the error check at the bottom checking for general errors, and the 3 parts of the cash flow statement reconcile. Okay, so the cash flow statement now is done. What we now need to do is build the balance sheet. Okay, guys. So now the income statement and the cash flow statement shells are done. They've got the error checks. They've got their basic calculations of the basic line items, and the income statement's calculating net profit after tax. The cash flow statement's calculating the net increase or decrease in cash held. Now we need to bring that into the balance sheet, which is sort of the heart and soul of the model. Okay, so let's go to the balance sheet. Now the balance sheet, first of all, I'm just going to look at Apple's quickly. So Apple's balance sheet, basically, it summarizes the assets, liabilities, the equity of the business. It's also commonly referred to as a statement of financial position. Okay, so if I go and look at Apple's balance sheet basically, as I said, contains 323 billion of assets and 258 billion of liabilities, resulting in total equity of 65 billion. Which is funny, which just shows you how incredibly high their market value is, which we'll talk about later. Their market cap is 2.3 trillion. Whereas their total equity value in their books is 65 million, which is, there's your return right there. Wish I bought Apple shares when Forrest Gump told me to. Okay, so what we're going to do now, we need to build this infrastructure, the forecast balance sheet, into our model. Okay, so if you look at the balance sheet on my notes, it's on my screen, this is what we're going to end up with. And when you look at this in the whole, it looks quite overwhelming. But as we build this up, every bit has its part, right? So the key is understanding the different parts of this, because this is where it gets complicated. But you can see we have the assets, liabilities, assets minus liabilities equals your net assets. The difference, by the way, between current and non-current assets and liabilities is whether or not they are the assets or liabilities that have value or incur a liability above and beyond the current period. So a 5-year debt facility would be a non-current liability, whereas cash at bank is a current asset because it's available right now. So same with debtors. Debtors are normally due within the current year, so they're current. So this is the balance sheet we're going to build, and what we're going to do to start is we're going to start with as I said right at the start, the key entry points for profit and cash. The entry point for profit is retained profits down the bottom, and the entry point for cash is cash in the current asset section of the balance sheet. So we're going to add all these line items to get them in. To start with, let's just start by go to the balance sheet, which is in 2B of the table of contents, and you'll see it's just an empty page. We've got some checks at the bottom, which we're going to complete, but it's just an empty page. So we're going to start by basically putting in the key the key header, the key totals. Okay, so total current assets, total non-current assets, total assets. So let's go to row 18, and these are all going to be bold headings. These headings, Ewan. So Control B after you enter them, all in column B. So in B18, let's put total current assets, and for now we're just going to put a 0 in row J as the value, and we're going to make that bold as well, and we're going to put a top border on it. And again, this is an example of where I think let's use some copying and pasting to save some time.
Yep.
Okay, so total current assets, great. And then now we want to copy and paste that down to row 22. So total non-current assets is in row 22.
Cool.
Exactly the same, but for the fact that it's got non. So non-current, total non-current assets.
And my process for copying and pasting that as well, just so people know, is hold down Shift and Space, highlight the entire row, copy, and then you can paste that in column A to get all that in.
Perfect. Entire row paste. Okay, so total non-current assets. Yes, let's capitalize it. Let's keep it perfect. We'll probably miss something in this. But anyway, we'll see how we go. And then in row 24, we're going to do total assets. So you can copy that down. And what we're going to do in 24 though is we're going to just make that total assets. And then what we're going to do is on that we're going to do a bottom and top border. This is where having the levels of borders great. So in the financial statements, you start with total borders, then another level down is total and single total and top and bottom. And then the very bottom level is going to be single top and double bottom. So let's put a top and bottom border on that, which is one of the options in the borders menu. Top and bottom border.
Cool. Let's do that one.
And there, top and bottom. You can copy that across. Yeah, cool. And then let's equal. So your total assets equals your total current assets plus your total non-current assets, and make sure you copy that across. Great. You'll find out if it's not going to work because when we add stuff, it won't balance, which is a beautiful thing about the error checks. Okay, so let's now do total current liabilities. So let's just take the total current assets heading in in the whole row 18 and paste that into row 31, total current liabilities, and just change the assets to liabilities. Done. And now let's do total non-current assets. Copy row 22, total non-current assets, and paste that down into non-current liabilities row 35. And that's total non-current liabilities. And then we're going to copy and paste total liabilities. So let's take the total assets row in 24, copy and paste that into row 37 to give us total liabilities. And then we just need to make sure that formula in row 37, the total liabilities equals J31 plus 35. Did that work straight away?
Yep. So we've got the same number of rows for current liabilities and non-current liabilities as assets.
That's luck. Let's just hope we've got it right. So let's just check this. 18, 22, 24. Yep. 31, 35, 37. Done. Okay, so net assets in row 39. I'll just take the total liabilities, copy the total liabilities, just copy that entire row, and then paste it into row 39. Change that total to net assets. And net assets obviously equals total assets minus total liabilities. Make sure you copy that across. And then let's put top, single top, and double, so top and double bottom border on that one. So it's funny, we're so used to in Modano not copying and pasting across because it automatically fills that with that, it's tough as to whether, I think with Excel prior to Modano, you do copy and paste a lot across, and that's why you get a lot of people that forget that and their balance sheet doesn't balance. As to whether you select all the cells and apply the border once or you apply the border and copy it across is up to you. Ewan's obviously he's doing it, applying it to one cell and copying it across. Great, so now we just need total equity. So total equity, let's go down to row 46. You can copy the net assets row, I reckon, because we want the borders. So go down to 46 and paste that in 46 and just make it total equity. And for now, we don't have any total equity data, so we don't have a formula. So just put 0 there. We're gonna fill that out. Okay, so now we've got our balance sheet. We've got our assets, liabilities, and equity sections. Our total assets is the sum of our total current assets and our total non-current assets. Our total liabilities is the sum of our total current liabilities and our total non-current liabilities. And our total equity will obviously will contain ordinary equity and retained profits, which we haven't done yet. Okay, so now before we jump in and do the cash and retained profit stuff, let's actually put in the error checks. Okay, so first of all, we need to put an error check in. If you just open rows 48 to 49, we're going to do the error values check. Now here, the error values check is interesting because net assets is an endpoint calc, and so is total equity. So a really easy way of checking for errors in two different outputs is just to add or subtract one from the other. So the check we normally do for balancing is does net assets equal total equity? So what you can do is you can actually do an is error check on that calc before doing that calc. Okay, so with the error values, let's just put equals if open brackets is error, and then make it J39 minus J46. So if net assets minus total equity, if is error that, close brackets. So if that calculation returns an error, then comma 1, throw a 1, otherwise return 0. Close brackets. Okay, and just copy that across. So that's our error values check. Now what we can do is we can put a balance check in. And again, this one is a more complex formula. The very first thing it does, it checks to see if the error values check has been thrown. So let's do if open brackets J48, which is the error values check, is not equal to 0, then put 0, because the check's already detected it.
Yep.
Otherwise, we're going to do what we did on the reconciliation check in the cash flow statement. We're going to use a round. In this case, we're going to do a round on the assets minus liabilities. So otherwise, open brackets round, and then open brackets J39 minus J46, which is net assets minus total equity, comma 5 decimal places, and then is not equal to 0. Then close brackets and multiply by 1. Because that's going to return true or false, and then multiply by 1. True times 1 equals 1. False times 1 equals 0. So that'll pick it up. So you can, and then you can. I always test my errors. So go into your total equity, just put a 1. Boom, that detects it. And then go in and do equals div 0.
1 divided by 0.
1 divided by 0. There you go.
Div.
So that's your error, and that's your calc.
Cool.
Great. So now we've got our shell, but the problem is it's not integrated yet. Doesn't contain any impacts from the income statement, doesn't contain any impacts from the cash flow statement. So let's do that. So the first thing we're going to do is we're going to bring in cash. So the net change in cash on the cash flow statement needs to be added to cash on the balance sheet in our forecasts. And that's the cash flow integration with the balance sheet. So to do that, we're going to create like a little, I suppose the financial modeling equivalent of, James likes to call them T accounts. A little T account, which is basically an opening balance, a movement, and a closing balance. And we're going to do that in rows 12, 13, and 14. But we're going to actually put the details of the T account in rows 12 and 13 indented, and then we're going to group them so you can collapse them away. Because it's quite confusing showing the build-up of T accounts in your balance sheet by default. So what you want to do is make them visible if somebody expands the rows, otherwise hide them away and just show the closing cash balance. Okay, so let's start with row 12 and go into column C, because it's going to be an indented detail row, and just put opening cash as the heading. And then let's go down and put in below, directly below that, in row 13, let's put changing cash. Changing cash, great. And then back in column B on the next row, let's just put cash, because that's what that's what they're going to see. That's going to be the cash balance. Okay, that's it, cash. So now let's go up to J12, and we're going to use an if statement here. Now, something you always have to do in financial models is distinguish the first period. A bad practice financial model will have a different formula in the first period, and then someone will copy everything across and destroy it. We would never do that. It's just you want your models to be able to be scalable and easily to extend and that type of stuff. If you add more periods to it, etc. So let's open the period title rows. So you'll see that we've grouped rows 5 to 8, and we've got what we call the time series period titles data in there. That contains the model start date, the period start date, the period end date, the period number, and the financial year. You can put whatever you want in there. They're the most common bits of data we find you need. It's sort of a best practice time series period title thing. You can add whatever you like. In a project finance model, you often have triggers as to construction versus operations, etc. For this case, we've kept it simple. But that row 7 counter row is the key to us writing formulas that do a different thing for the first period for subsequent periods, which happens a lot in forecast models. So you can use flag-based systems for this, where you put flags everywhere and refer to those. For example, you could have a flag somewhere that says, is it the first period? If you wanted to, personal choice, doesn't really affect the world. Although people seem to have very strong views on these things, I don't care. So we're just going to use if statements. Same logic, same mentality. Okay, so let's go into J12 and let's put equals if J7, which is the counter, if the row number. Now we're gonna throw out this best practice. We're gonna hit F4, and we're gonna make the row. We're gonna make the put your function count. We're gonna make the, if you hit F4, we're gonna make the actual row absolute referenced.
Yep.
And we're doing that because in a normal model where you contain lots of categories of data, like 5 revenue categories by product, for example, you'd write a formula and copy it down, and you'd want the if statement to stay locked to that row. Okay, so we're doing that as best practice. In this exercise, we're not doing categories of data because we're keeping it simple. We're just doing that as a best practice because we're trying to drill best practice into you, because this stuff comes back and bites you at 3 a.m. on an M&A deal if you don't do it well from the outset. It's like your dad teaching you a horrible golf swing that slices, you're stuck with it for life. So we're going to try and stop that. So we're doing if J$7, so if the period number equals 1, then comma, we want the opening balance sheet value in J6. So we want the opening balance sheet cash balance. So go back to the opening balance sheet and it's in J6. So click on the tab down below and just go to that J6 with the 38 billion in there. Now in this case, we're going to click F4. Again, best practice. We're going to click F4 and we're going to lock the column because that column, we don't want it to drag across because it's always that cell. And even though that won't matter here because in subsequent periods, it'll take the prior period's closing balance, it's still best practice so people know that you're referring to that cell, not to some weird forecast on the opening balance sheet.
Yep. And I'll also just touch on the first one, we hit F4 twice to lock from both column and row to lock just the row. And then here we hit it 3 times to lock to the column, not the row.
Exactly. And at the F4, it iterates between the different options of like row absolute, column absolute, and then, is it one or the other, then both absolute. Okay, so if J7 equals 1, opening balance sheet J6, otherwise, so comma, and Excel does a really annoying thing here. If you go back to the balance sheet, and then you select, you want to select, say, I14. If you've been off the page, so select I14, so the prior period closing balance cash. Now you'll see that it adds balance sheet to that. It adds the BS. It adds the BS exclamation mark. That's because you've been off the sheet. The moment you've got one external sheet reference, it assumes all the following references you enter are also external sheet references. That drives me mad. Fix it, Excel. But they haven't in 20 years. So instead, you have to keep deleting that stuff. So just delete that because it's very confusing for other modelers. They'll think it's an external sheet reference when it's not. So the formula should be if J7 equals 1, the opening cash balance in J6 on the opening balance sheet. Otherwise, the prior period closing cash balance in I14, which we haven't created yet, but trust us. And then close brackets. I wouldn't bother copying that across yet. Okay, so the change in cash, easy, straight from the cash flow statement. Already built that. So let's just, in row 13 equals the cash flow statement change in cash for FY21, which is J40, cash flow statement J40. And our cash flow statement is going to be positive and negative numbers are going to be expressed as positive and negative numbers. So a cash outflow will be negative, cash inflow will be positive. That means we can just equal that, okay? It's always safe. And the cash balance is going to be the sum of the opening balance and the movement. So alt equals. So here's a good one for you as well. You can do equal sum and do that. One of the hero things I always use is alt equals. So if you click alt equals, that will always give you the sum. You've got to be careful. Sometimes it gets it wrong, but in this situation, we'll get it right. So equals the sum of J12 to J13. And then what we're going to do is we're going to put a bottom dashed border on row 13. And this is important because if we put the border on the top of the row 14, it'll be visible when we actually collapse these rows.
Yep.
So let's go that, and again, we're going to use that dash border. So I always just do for this, is it Control 1? I do Control 1 for this. I think I do Control 1 and just throw that up, which is how you get the format cells. So just do the dash border again and do the bottom dash border. Okay, and do OK. And now you can copy that across. Now what we need to do, we just need to make sure now that is included in, we want to make sure that's included now in total current assets. So go to total current assets and make that equal cash because that's the only current asset we've got right now. And you'll see, awesome, balance sheet's gone off. That's what you'd expect. We've included cash from the opening balance sheet, but we haven't included retained profits from the opening balance sheet. So we're not balancing, which is exactly what you'd expect. Okay, so at the moment we're just forecasting. We've got no forecast. We're just forecasting opening cash sitting there. There's no retained profits. Balance sheet's gone off. So we're in a bad state here. So now we need to resolve this, okay? So, but that's a great thing. So you'll see the error check down the bottom. If you go down and just look at the error check on the balance sheet, that's done exactly what you expect it to do. It's gone through the model and we can see that. So let's address this now by adding the retained profits calculation to the balance sheet. So let's go down to, the retained profits is going to be in part of total equity. Okay, so we're going to add it in rows 42 to, I'm just going to check to see. One other thing we need to do is just group those rows, yeah. So go to rows, there's lots of ways to do this. I just use the mouse. If you can obviously use Control Shift like Ewan's doing.
Alt Shift right.
Alt Shift right. I just select. To be honest, I just select the rows. So just go 12, 13, select them using the row headers, and right click. I think you can just do right click and group, can't you?
Yep.
Oh no, you can't.
Nope.
No, I do Control Shift right. Otherwise, just go data, and then just do group. Okay, and you'll see when it groups, it adds that extra little the little plus minus box, which now you can collapse and expand. And the right terminology there, everyone gets this wrong. Everyone talks about hiding, unhiding, which is sort of right. It's actually, when you group rows, you collapse and expand them. So you just grouped and collapsed those, and now you expand them. Hiding a row is actually hiding it without grouping it, which is quite different. Grouping leaves the user able to do it easily with the mouse. Hiding means they have to actually go in and unhide rows, which is messy because they change the state of the model. So you see there we've now got our cash beautifully going across. I would leave that expanded for now. Let's just leave that expanded because we want to see when our cash comes in. Okay, now let's do our retained profits block down the bottom. So the retained profits is a similar tier count. This one's a bit more complex. Retained profits is our opening cash is literally our opening cash balance plus our moving cash is our closing. Our retained profits, the opening retained profits balance is you start with the balance sheet and then you add your profit from the period, your net profit after tax from the income statement. I've got this in front of me now. And then you have your dividends declared come out of retained profits. And they come out, we'll discuss this later, they come out when you declare them, not when you actually pay them, because they're a liability, they come out of your profits, they become a liability, a payable. And then your closing retained profits balance is therefore your opening balance plus your NPAT minus your dividends declared equals your closing retained profits. So let's build that. So in row 42, let's in column C, again indented, let's put opening balance. And then in row 43, put net profit after tax. I should make a comment on this as well. You would normally link the headings. So for example, I'd normally link that heading with a formula to the income statement, net profit after tax. But in this exercise, we're not going to do that. So we're not going to link any headings in this exercise purely because we thought it would make the instructions much, much more complicated. But in real life, you would not have multiple headings everywhere. So if you change at the moment net profit on your income statement to net profit after tax to net profit, it's not going to flow through the way we're doing this, which is why you'd normally link headings to prevent what we call duplicate headings in different parts of the model. Again, trying to keep it simple. This exercise will take long enough just doing stuff quickly, but I wanted to note that. Okay, so net profit after tax. Then in row 44, let's put dividends declared, which will be forecast as part of ordinary equity later on in this exercise. And then we have retained profits in 45 in column B, retained profits, just like that's the closing balance. We just call it retained profits. Okay, so with the opening balance, it's exactly the same as the calculation we had for cash, but it's going to grab the opening balance of retained profits from the cash from the balance sheet, not cash. So the formula is equals if open brackets $7, which is the counter row. If $7 equals 1, then go to the opening balance sheet and grab the retained profits balance, which equals cash because it's a plug. So we grab the retained profits balance and then do otherwise the prior period closing, which is I-45, and you've got to get rid of that weird little painful thing again. Thanks, Microsoft.
There we go.
I-45.
I-45. Cool.
Great, and close that. Okay, awesome. So we've got that. That's what you'd expect to see. Opening retained profits equals opening cash because it's a plug item. Net profit after tax is going to come straight from the income statement. This is where it's funny when I did training in New York with Citigroup on this. There was a guy called Cash Cashel, and he was a hero, and he trained everyone on Wall Street, and then he took off and on his boat after 3 months of training for a couple months. But he used to talk about the way you need to think about the three-way financial statements as your net income from your income statement swims down to your retained profits, and your cash swims up to your cash, and together they sort of embryonically form this beautiful balance sheet. And I'll never forget him sort of talking about the swimming. So we need to swim our net profit after tax down into our retained profits, and therefore equals J24 on the income statement. Our dividends declared we haven't done yet. We'll do that when we create the equity part of the business. So let's just put 0. We are going to make dividends declared come in as negative numbers. The profit and loss will be positive and negative. So effectively we can just do a sum down on a sum up on this. So the closing retained profits balance is just equal to sum J42 to 44, which is another alt equals. And then you can copy now let's just add the border on that again. So let's add the border to row to J44. Again, nice little dash border because it's a detail level border. This stuff all adds up, by the way. We get if we get you pick up a model where people haven't followed rules like this, and it is a dog's breakfast.
Yeah, there's method to the madness.
There's method to the madness. So if you do this stuff clearly across your team, the world becomes a beautiful place. Otherwise, it's like getting in someone's car that hasn't actually taken rubbish out of the back seat for 3 years, which is the average model.
Yes.
Which is what we're trying to fix. So let's copy that across. And you'll see the balance sheet still not balancing. Why is the balance sheet not balancing?
Because we haven't hooked in those retained profits.
Exactly. So let's just hook those in. At the moment, total equity equals retained profits. So you'll see when you add that, boom, the balance sheet balances. To this day, after 20 years, I still love it when a balance sheet rebalances. It's kind of like cleaning up your room.
Yeah.
And that's it. So what we've now got, we just now need to go down. I think, and make sure.
Rows again.
We need to group those rows. So group the 3 detail rows: opening balance, net profit after tax, and dividends declared. And now the balance sheet balances. So now we just need to go to the alert check. So previously we did the error check and the balance check, I believe. Yep, we did those two. So the alert checks are different to error checks in that they alert model users to things which maybe. So for example, an alert check may be something like you have a term sheet that says, your interest coverage ratio requirement is 2.5 times. What an alert check might say is alert me if it gets below 3. But then make it an error if it's below 2.5. So alert check is more about making people aware of the fact there's some wacky stuff going on, but it might not be an error. And a good example of an alert check here is cash going negative. Like companies might have an overdraft, but if they had an overdraft facility, you'd normally model that as part of debt. You wouldn't just have it going through negative cash, because going through cash is kind of weird because you normally would have you'd be paying interest on an overdraft, whereas your interest at bank, cash at bank, normally you assume it's going to be positive because you're solvent. So it's kind of weird. So we normally put an alert check in for negative cash because it's not really an error, but it's something that's pretty weird. Okay, so let's put this check in row 53. We're just going to do the same theory. So let's do the staggered development principle again.
Yep.
So equals open brackets, equals if open brackets is error, say J14. So we want to make sure that if there's an error, so that's the error check. So the error check. If is error J14, yeah. So that's right. Sorry. If is error J14.
Yep.
Then let's just put 0. Let's put 0.
So 0.
Otherwise 1. And just close that brackets and end it. And this is just the staggered development, right?
Yep.
So what we've done there is we've just, if there's an error in the actual closing cash balance, just ignore it. And the reason why we're ignoring it is because that will be caught by the error values check down below.
Yes.
So we could have used a reference to the error values check, but this is a bit safer because we're checking the actual cell we're checking. So now where you put that 1 at the end, we're going to actually do an if J14 is less than 0. So just do where the 1 is, delete the 1 and do open brackets, and do J14 is less than 0.
So we've got
The closing cash balance is less than 0. And then close brackets times 1. Now this is technically called a data conversion. We could have put another if statement in there saying if J14 is less than 1, then put 1, otherwise put 0, and we would have had what's called an embedded if statement. So we would have had if is error, otherwise if 0, otherwise if. We try to avoid embedded if statements. That it starts to get really hard to read. So instead what we've done here is we've said J14 is less than 0 in brackets is going to return true or false. It'll be true if J14 is less than 0. True equals 1, false equals 0. So when you multiply it by 1, it returns 1 or 0. And you can check that. So press enter on that. You can check that by going in. Just go to your closing cash balance. I'll copy that across. And just go into your closing cash balance and actually just type over the formula and write -1. I always check it this way. And you go bang, and you see now you've got error in balance sheet and you've got alert in balance sheet. You see that?
Yep.
So there you go. So now you can just Control Z to get rid of that, but that tests your error check works. Okay, so now if you close the cash build up row, if you close the cash build up rows and the retained profit rows, collapse those. You can click at the top, level 2. I'll probably leave the period titles expanded because we're going to be using those throughout the exercise.
Perfect.
So now we've got our cash, our retained profits. They are just carrying forward our opening balances off the opening balance sheet, and our financial statements shell is done. So as much as this is a big part of this course, I mean, this is I think a fifth. It's over a quarter of this course is setting that up, because that's the key understanding. So we've got our income statement calculating net profit after tax, swimming through to the retained profits part of our balance sheet. We've got our cash flow statement calculating the net change in cash held, swimming up to the cash at bank in the assets. And because at the moment our balance sheet just contains cash and we've got a plug with retained profits, cash equals retained profits, assets equals net assets equals equity, and our balance sheet balances, we've got 0 forecasts, we're in great shape. So now we're ready to start doing the actual forecast of the model and build the actual engine of the model.